Good afternoon, traders. Joseph here from Eightcap. Welcome to today's update. So, slightly different today. We're just going to do a quick walk around and a quick outlook to tonight. With just after what happened yesterday, it was quite a surprising move in the market. There's no real single market I want to just do a single report on. I really would just want to have a look at. Just go over a few of the markets that saw some key moves yesterday, and it was a real surprise. So after we saw CPI come in at 0.4%, well above expectations of 0.2%, and that was a month on month, and then we saw the year on year come in at 8.2% higher than expected. So everything played out as you'd expect when it first hit. We saw rallies, and we saw the dollar, put on a really nice move higher. We saw stocks moved sharply lower, but then everything changed, and that's the big question. Now, some are saying that they could see this as the final peak, and that potentially this could be peak inflation, and that after this report we're going to start to see inflation start to move lower or stabilize, and that was what triggered the rally, that they're really seeing it at the end of the line. Now, we are yet to really see if that is the case, but definitely it's a pretty solid theory, and the markets, regardless of whatever the reason was, really finished sharply higher, and it was across the boards, and we're seeing it on crypto, we're seeing on stock futures, stock indices last night finishing up, well above what would have been expected after that real strong moves lower. And we also saw it on risk currencies as well. We can see that the risk currencies and the dollar are trading firmly, continue to trade much firmly to the yen, and we are seeing higher moves to the USD after yesterday's moves higher. So the pound definitely was the leading currency overnight and this week in the risk sector. This comes off the back of comments that the Bank of England is going to continue to support the market with purchases of the gilts, and also we heard today that some of the proposed tax cuts are going to be amended, and this has continued to shore up confidence in the pound, and add to that the turnaround in the risk markets and the selling of the USD. It just gave the pound all it needed to really get running, and we saw close to 2% added yesterday. And on the pound yen, we've seen two wonderful extensions. Yesterday's extension was a beauty, and we've seen, as you can just see there, it's 2.10%. We are getting back up to this high that we saw back in the 13th of the 9th. We're wondering if we can see another move above that level. If we do, that'll be quite a achievement by the buyers after that real sell-off we saw and then on the back of the drama we saw with the selling of the pound and the pension funds, which added to that when they were forced to get more collateral, which equaled them selling pound, which just led to that flash crash back in September. But as we can see now, that really is just a thing of the past. The market has retraced all of that move, and not only has it retraced all that move, it's gone back to levels that even preceded the first downtrend that we saw starting that off, and that was back in the 12th and the 9th. But also to add to that, we are seeing a very weak Japanese yen today, and and continuing on this month of October. And there is talk that we may, there is some intervention talk from the Bank of Japan, but at this point in time, it's yet to really come into fruition. The dollar yen continues to be a champion. We saw new highs yesterday that were going back in the sort of the 20 to 30 year period. There was a move up to 147.71, and there's new yearly highs with everything else that goes with it. The Aussie and the Euro. The Aussie's quite strong today. It had a real push lower yesterday, but that was saved, and we saw that higher move and a higher move so far today. And the Euro, which has been a bit firmer, we're still seeing that support. We're watching down at that 9,690 area. We are wondering now if we can see a risk rally get underway. Could we see the Euro get back up to parity? It hasn't been at parity for a bit of a stretch now, going back really to the 19th of the 9th. So if we can see this high low here turn into something like we're seeing on the pound to the USD, could we see a new rally get going? There would have to be that first test here and then back up to parity. So hopefully we'll see if buyers can achieve that. It really does come down to the USD as well. The US dollar is seeing a little bit of demand so far today. There's a tiny bit of support edging in at 112.35. Resistance remains up at 113.41. And we did ask the question if that was a a bull trap. So far it has turned into a small bull trap, despite the very strangeness of that whole situation. We will see today with the last real rough key data that's coming out, which is US retail sales. If that does play into the picture, it's hard to make a forecast because realistically we did feel that if we got softer CPI, we could see the pound rally just with some of the other influences that were helping it stabilize after its recent issues. But definitely won't be calling that a win because I don't think anyone really would have expected to see that rally after yesterday's CPI data. It really looked like it was going to be another nail in the coffin. We would have seen the US dollar blasting higher, but obviously that didn't happen. So we're going to just see what happens with retail sales today, and if that can cause push the US dollar lower, and if that will continue to help risk markets push higher. This is sitting as a lower high at the moment. We just need to see another push lower to really signal a potential trend break. We will keep going. We don't want to keep too much of your time on this video at the end of the week. So just off the stock indexes, we can see the session that the US 30 had after dipping down to close to testing the lows seen very early in the month or late September, the 3rd and the 10th. We've now just seen a catapult back up. This is the resistance we'll be looking to see if we can break, and that's at 290, 30, 300 area. The SPX 500. A little bit further to go, but as long as we can hold this support here at that 3574, we'll look to see if the market can make another extension higher, if this risk rally can continue, and we'll be looking for a test potentially of that 3788. Now, just quickly, we want to just end on some of the cryptocurrencies. Bitcoin, after breaking heavily lower, fought back, and we're seeing a bit of a rally today. The overall picture doesn't really change, unfortunately. We still are seeing markets in these sideways patterns at the moment, so we are seeing this range still here on Bitcoin. Ethereum, same story. We've had a bounce, but we still need to see a break of this high here at 1364 to really say that we've got some sort of move going on. That was definitely a nasty one yesterday for breaking. If you were trying to sell the market on a breakout strategy, they really can be nasty. Sometimes you need to see a proper confirmed break of the range before you get in there. But if you were short yesterday, my condolences, and hopefully you will pick something up on the other side. Now, BNB has been a little bit more interesting. The range is a bit wider, but again, we just continue to see this fake out, and then this solid range pattern between these 2 points here. Now, Canando was in a real spot of bother. It is 1.46% higher today, but as we can see here, yesterday we did set new yearly lows. We have returned back in there, but this market continues to trade outside of the descending triangle, so I wouldn't be looking at this market anywhere with any long interest right now until we can see a real firm move up by buyers. And so that's all we'll really touch on with crypto. I finally actually want to talk about Ripple. So Ripple looked like it was going to break lower and confirm that trend break, but it has fought back. Ripple still is the best of the top 10, top 15, with that really nice rally we saw, which was at 66%. But at the moment it is consolidating, and we are seeing the consolidation between 0.43 and really this area here at 0.53. It's a very wide range, so depending on what continues to drive buyers, that has been the SEC case, we'll look to see if buyers can get back up and test and break that 0.53 to continue this trend. But right now we are seeing support at 0.47, and obviously there's that range support at 0.435. So just finally tonight, what we have coming up to cap off a really exciting week in the markets, we have US retail sales and core retail sales. So they're looking at 0.2% on retail sales and minus 0.1% in the core retail sales. And finally, and they're coming at 11:30, which is 8:30 New York time, and at 1 a.m. Local time, we have prelim UOM consumer sentiment looking for 58.7. But I think the retail sales is going to be the final piece. I'm not making any calls about it. Last night totally bewildered me. But let's just see if the pieces can still continue to fall, and if we can see risk markets continue to hold gains and continue to push higher. And as we can see out now, stock futures are pushing higher, and we can see the US 30 and the SPX and the NDX 100 all trading nice and firmer at this stage, heading towards the European session. So that's it. We hope you have a fantastic weekend. Enjoy trading for the rest of the week, and until next week, good trading, and bye for now.